welcome. You're watching Money9. I'm Sakshi Batra, and on this show, we talk all about markets and fundamentals and help you understand how to really analyze the current market scenario. To help us with everything on the markets, I have with me a very special guest joining in. Mr. Kranti Batini joins in from WealthMills Securities on this edition of Market Meter. Mr. Badini, afternoon. Thank you so much for taking out time for us. Well, the markets have been in a very sideways kind of a momentum, lackluster trade being seen today. What do you make of the kind of subdued action we've been witnessing over the last 2 or 3 odd sessions? Is it because this was a truncated week, people wanted to take out money for the festivities ahead, or does this actually show us that the underlying trend could also indicate some more correction coming in, which is overdue?
Sakshi, if you have to ask me, keeping point blank range, okay, any correction that comes in the market, okay, there is ample liquidity is there that's going to absorb the selling pressure. But at this point of time, of course, during this week, it's a very short week. We have only just 4 trading days this week. But what we can see is on the upper range of the market looks little bit looks tight, okay. The valuations little bit looks stretched, okay. Looking for a value buys in this juncture, in these market conditions, looks very difficult. So one need to do a very big exercise. They need to go for stocks like ITC, which has not moved, but with a hope that the stock offers a lot of margin of safety. And so looking for these kind of margin of safety value buys in this market is very, very difficult. But one thing what we need to see is the Q2 and Q3, the quarter's earning results are crucial for the market. That gives the headroom for the market. Q2 results are going to play a very important role for the sustainability of the market at this juncture, and also which gives the market headroom to go up further.
Absolutely, sir. So, what do you make of the kind of effort that Nifty Bank had been trying to make in the last 2 or 3 odd sessions to gain some strength after the long haul of underperformance? Is it going to show some strength going forward? Are you betting on any winners from the banking and financial space at the current juncture?
Sakshi, if the market has to go to new highs, okay, it needs support from Bank Nifty and also the large cap banks, especially the private sector banks are very important for the market. And to be in a markets in a bull rally, okay, the support from Bank Nifty is extremely essential. So, and one thing we can't ignore the banks when the other sectors of the economy when they are underperforming, or also if they're performing well, banks need to perform, because the key reason is banks are treated as the epicenter and the center of growth. So definitely when the whole economy comes into on track, okay, definitely banks are going to outperform over a period of time. Investors need to have a little bit patience, and even the bank, the pockets where they need to enter is very important for the investors, where they want to be, whether they want to be in a corporate centric banks or retail centric banks. The choice is with the investors.
Okay, understood. So also, would you, I wanted to take your comment on the broader market space as well. Do you think the underperformance is behind us, and again, we will be able to see the broader market space, especially the mid caps, taking the forefront?
Sakshi, see, the problem right now here is the valuations are list. If we look at the valuations of individual stocks and also the broader basis, it looks stretched. And we have witnessed many of the mid caps getting multiplied over a period of time.
Yeah.
So that's why when I talk about the performance, it is related to the next couple of quarters. And what we are witnessing is the pent up demand is there with respect to the overall economy. So how the valuation matrix plays the role in the next coming quarters plays an extremely key role for the sustainability of mid and small caps. One need to look always, okay, having said that, one need to always look for the stocks which are with a high margin of safety, very essential at this market point, at this time in the market.
Yeah, absolutely, sir. So also wanted to take your comments on some of the move that we have been seeing on the heavyweights lately. Talk about stocks like TCS, Reliance Industries, even HUL, the kind of rally that we've seen in the month of August, 10, 15 odd percent. Now, these are heavyweights which normally move when there is a serious amount of money commitment. So, what has really changed for some of these hallowed stocks like TCS or Reliance or even Infosys that have rallied so sharply in the market when the markets have overall struggled?
Sakshi, see, when I have to invest $1 million in India, okay, in the markets at this point of time, I always look for the stocks with a high liquidity, and also look for the stocks with a high margin of safety, and also the obviously the choice will be the big guys. So as you rightly named the stocks, okay, they perfectly match for the my choice. So
Hmm.
I will be rather than happy to stay with the large cap stocks. I have shared on your show also a couple of times. Okay, there will be a rally, a mild rally that's going to come in the large cap stocks. So in line with our expectations, right now what we are witnessing is the rally in the large cap stock, because
Hmm.
it gives ample liquidity, and also the earnings visibility is very much clear in the large cap stocks. Whereas mid cap stocks, if you consider, they have rallied a lot in last 14 to 18 months time. So right now the large cap investors are looking their choice, and they're doing a cherry picking in the large cap than the mid cap stocks are concerned.
Absolutely. So let's now talk about some of the stocks that you've been recommending and have performed really well on our show. And then we'll come on to the new recommendation as well. I wanted to talk about one space that is the realty space that has seen a very, very sharp run. And at the beginning of the realties rally, you had suggested to our viewers Kolte Patil as a stock recommendation. And the stock has really performed very well in this kind of a run up in the markets, especially the realty index. What do you have to say to all the investors who've already had good amount of profit after listening to you, who invested, and many many congratulations for you to pick out this stock on a timely basis.
Uh, Sakshi, the main reason is on May 9th, it seems we advised Kolte Patil on your show. I think that day only I got discharged from the hospital from COVID. I still remember. Yeah, 20th May. Okay, just a week after I discharged from the hospital. So the point I'm trying to tell you, that time the mood was reality. Why I pointed out that I discharged from the hospital is it was the peak of the COVID second wave. So
Yes.
nobody were thinking about the reality space. But we can see the value in the stock, and as I always mention, go for the margin of safety stocks which are available at attractive valuations with quality management. So Kolte Patil was the perfect fit for that point of time. So the stock has delivered nearly 40% return during this period of last 3 months. So I advise investors to book profit from the table at this point of time, and any dip the stocks gives, they can re-enter. The stock is completely priced in with respect to the valuations are concerned at present. So I advise the investors to book profit at the current point of time.
Okay, understood that. So booking profit and rejoicing the 41% gains that you have got on your investment is the right way to go about Kolte Patil at the moment. Now we did talk about Reliance Industries a bit, and this stock has also broken out of a multi-year range. It has reached at record high levels as well, and there is a big event unfolding tomorrow. Even as we go into festivities, we everybody is awaiting the Geo Next smartphone. A whole lot of anticipations on that front, on the pricing, the specifications, how it will compete with the other smartphone markets, and the way it had disrupted the earlier Geo phone had disrupted. Again, a whole lot of expectations are building up around this event. How do you see Reliance Industries at this juncture, especially because you had also recommended this stock to us at a very early stage, and after that it has raised, seen about 30% odd jump. So, your advice to investors now?
Uh, Sakshi, Reliance is the stock for all seasons. Okay, every investors they need to have Reliance Industries in their portfolio. Reliance Industries, we advised on your show on 8th of April when everybody going behind the mid and small cap stocks. The reason is it offers lot of margin of safety, of course, and also give the balance to your individual portfolio. Why we
Yeah.
need to have Reliance in your portfolio? The main reason is when the index is rising, Reliance is going to outperform, and also when the index is not performing also, Reliance gives the stability to the individual portfolio. And this stock on a SOTP basis, still Reliance is, we can consider as one of the undervalued stock, I can say, even though despite of the market capitalization above 15 lakhs crores at point of time. But if we see and value the business models on SOTP basis, the sum of the parts business model, it comes up with various investment avenues. So Reliance is the stock for all the seasons. Individual investors, they need to have Reliance on every dip in their portfolio.
Okay,
And
so buy on
advise
dip
the
is the
investors, even
strategy.
though despite they entered at 1900, they are sitting at 300 sorry 30% gain, they can hold on to the stock. Don't try to exit.
Okay, so don't exit the stock, hold on to this stock, and you can still enter on dips and continue building on. This is a stock for all seasons, as Mr. Batini really says. So, also for today, which is the stock that is on your radar, and from which sector have you picked that out from?
Sakshi, it's a very small cap stock we have today. I earlier also advised this stock on your show, but still I want to, since the value is there in this stock, Max India is the stock I advocate investors to accumulate at this current price moment. The stock offers a different business model in India. It's a very undervalued stock in India with a market cap around 350 crores. And if I have to value the stock on a SOTP basis, the stock valuations are around 1,000 crores. But
Yeah.
what the business model, what I like in this company is they are into elderly care, and it's a very nascent stage business in India. So elder care business is going to uh, do well in the days to come. They currently have a presence in NCR region. They're going to come up to the pan India presence over a period of time. So elder care business is going to be a new concept in India. So the margins of this business is around 25 to 30% in this business model. So investors with a long-term horizon definitely invest in Max India at this current price. For a longer term horizon, definitely this stock is going to perform well in the days to come.
Okay, understood that. And on that note, I want to
When
thank you for
I
giving.
always talk about margin of safety, this stock fits to the margin of safety.
Okay, so Max India for the margin of safety from the current levels, you can actually expect about 25% upside for about 1 year duration. And that's the stock that you should keep in your mind from a small cap space in case you're still scouting for opportunities in the broader markets. Thank you very much, Mr. Patini, for speaking to us and sharing your insights on the markets and these recommendations for our viewers as well. Always a pleasure having you.
Thank you, Sakshi. Always a pleasure. God bless Indian stock markets.
All right, thank you so much. And then let's move on to see how the markets are trading at this point. We have crossed the half time, and let's see if there is any change in the markets right from the early trade. So the markets have extended the losses that we were seeing in the first take, and 58,121, the current level for the Sensex, it's down by 129 odd points. The Nifty 50 is now inching closer to the 17,300 mark. It's lost 44 3 odd points as well, and a quarter percent loss can be seen here. The Nifty Bank is also declining, and that's declining sharper than the narrow markets. 0.5% cut for this index, and the broader markets are mixed at the moment, with slight bit of losses coming in for the mid caps, but the small caps are still holding up and bucking the trend for the markets. Sectorally speaking, you'll be able to see more sectors are still in the red than in the green at the current moment. It's just the FMCG index, the media and metals that are still holding up the fort for the markets. Rest all the other sectors have slipped into the red, extended the losses from the morning gains, morning losses as well. Nifty Realty is the big laggard here, over a percent kind of a cut, and the banks are following up next, which are dragging the street at the moment. Let's also see how the gainers and the losers are placed at the moment. And Nifty 50 gainers would include stocks from the oil and gas space like ONGC that's inched up higher, from FMCG, Nestle, ITC, both have seen some gains in the at halftime today. Auto space major Tata Motors and Bharti Airtel continues to ride on the positive momentum in the telecom space as well. For the laggards, if you'll see, there'll be a whole lot of stocks coming in from, say, the kind of bank stocks that we've been seeing, the realty space that we've been seeing. Those are the laggards that you will have to see. As far as the Nifty 50 laggards are concerned, you can see SBI Life, Ultratech Cement, Axis Bank, Titan, and Bajaj Finance, the laggards of the day, led by the losses in SBI Life for sure. And with that, we wrap up this edition of Market Meter for you. We'll keep you posted with all the market updates so that you can take a decision of your investments and make towards profitable trades as well. Thanks a lot for tuning in for now.